Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin. Starting however with the volume profile on the weekly time frame. As you can see, very nicely respected. Resistance breaking inside to the value area high. Also resistance support at the point of control, and now we closed a weekly candle above the range, above the value area high. Therefore, it becomes important to potentially look for a retest and continuation, or a potential deviation where if a retest fails and we get back inside the range, we can look for the point of control once more, if not the other side of the range. On this weekly time frame, we also have two weekly gaps above us, and now we closed a weekly candle inside this weekly gap, increasing the probabilities to fill this gap to the upside, where the higher end of this gap is at 53.3k. We still have another gap above price as well, which is the one up here between 59.5k and 62.3k. On the monthly time frame, we also had a gap over here. As you can see, it has been tested once, a big rejection, tested twice, little rejection, and now we are inside this monthly gap. Touching it for the third time increased the probabilities to also fill this gap with the same target as the weekly gap at 53.3k. On the weekly time frame, we also have this channel here, which is taken from the low to the 24k low to the first time hitting 31k high. Here you can see that now price has closed a weekly candle above the channel, and the same is true here for the channel as it is for the range, that we got to keep an eye on a potential retest for either continuation, or if price fills and gets back inside the channel, we can look for the other side of the channel. If we go to the 4-hour time frame, then the bullish scenario here is a 5-wave impulsive structure: 1 2 1 2 3 4 5, looking for the green 4 and eventually another push towards the upside in a wave 5. The common target area for a wave 4 is between the 236 and the 05, taken from the low of 2 to the high of 3, giving us a target area between 50.3k and 47.4k. The 0.618 is an invalidation for a wave 4, sitting at 46k. You can also see the vertical lines on my chart. These are fib times comparing wave 2 in time with wave 4 in time. The fib time is taken from the high over here to the low of wave 2 and then put on top of the high of this wave 3. And as you can see, price is currently ranging between the 2 and the 3 fib time, which is absolutely fine for wave 4, as most commonly a wave 4 is longer in time than a wave 2, so that's actually also what we like to see. However, a wave 4 should also not be too long the moment it is approaching the 5 and the 6 fib time, meaning wave 4 is 5 to 6 times longer than wave 2 in time. It lowers the probabilities for a wave 4. The 5 fib time is currently sitting on the 23rd of February at 1 a.m. in the morning. Now in this bullish scenario on the 4-hour chart, we also need to look for corrective structures to the downside on the 1-hour chart. So that means that from this high, we want to see at least a 3-wave structure to the downside to open the possibilities for a corrective structure. Here we are looking for a WXY or an ABC. The WXY here is then a zigzag X, and then in wave Y we are going to be looking for either a triangle or a flat structure, significantly lowering the probabilities for a double zigzag to the downside, as in a double zigzag wave X preferably does not touch the 0.7 Fibonacci. In a flat structure, we're looking for a 3-wave A, eventually a bigger 3-wave B. Most common target for wave B is between the 1.236 and the 1.38 Fibonacci, taken from the high to the low of A, giving us a target between 53.4k and 53.8k, after which we expect an impulsive wave C to the downside to at least take the low of this wave A and also enter the wave 4 target area. In the bearish scenario, we are looking for a 3-wave structure to the upside, A, B, C, currently ranging between the 1.618 and the 2. As price is ranging above the 1.618, it does increase the probabilities for an impulsive structure compared to an ABC. However, we know from experience a wave C can be very long and even extend to higher prices, and therefore we cannot forget about this ABC. Now, if you're looking for an impulse in a 1, 2, 3, 4, 5, this retracement that you then get to the downside is not allowed to hit the 0.618 at 46k, but for, of course, an ABC three-wave structure, you want price to move to the downside and hit the 46k area to invalidate an impulse and increase the probabilities to move towards the downside. Now, this scenario is then part of also a bigger flat scenario in a 3-wave A, 3-wave B, and then we're looking for a 5-wave C. In this flat, the common target area for your wave B is between the 1.236 and the 1.38 Fibonacci, taken from the high to the low of A, which gives you a target between 51.6k and 53.1k, with a less common target being the 1.618 for wave B at 55.6k. On the micro, if wave C is already in, then we have to look for impulsive structures to the downside. In this scenario, we only have 3 potential options. We have an impulse to the downside, 1, 2, 3, 4, 5, but as you can see at the moment, that is very unlikely, as this looks very much like a 3-wave structure, not an impulsive structure. Then we have a double 1, 2 in a wave 1, 2, 1, 2, and then continuation to the downside. But also here, that is very unlikely. If I take a fib from the high to the low and I toggle on the 886, then you can see the 886 over here is hit. So if we are looking for a wave 1, 2, 1, 2, for then a 3 to the downside, the second wave 2 hit the 886, rare target for a wave 2, common for a B or X, increasing probabilities any move down is a C or Y, and therefore increasing probabilities to go back up at a later stage. So pretty much the only scenario we then have is a potential diagonal here, where we have a zigzag in a wave 1, which works nicely, and then we are looking for another zigzag to the upside in a wave 2, eventually a 3, 4, and a 5. However, for a diagonal, it's way too early to call at the moment, and preferably I am waiting for a wave 4 to be in before really starting to look for diagonals. But out of the 3 options I have here, a diagonal would be the highest probability option. Looking at the CVD divergences, we have bullish CVD divergences, and the local ones just played out higher low in price, lower low on the CVD. Target is this high, which has just been taken, so these have played out now. The only one that didn't play out is this bigger one here, higher low in price, lower low on the CVD, with the target being this high and the invalidation moving below the low over here at 49.7k. If you then look at the probabilities of the different scenarios, then on the 4-hour time frame, the probabilities at the moment are higher to still take this high at a certain moment in time, as the probabilities are higher that this is a corrective structure to the downside. We also have bullish CVD divergences building, which does give extra probabilities to price taking this high. We didn't yet fill the monthly and the weekly gap till 53.3k, which also therefore adds some probabilities to price taking the high. However, we are of course looking for eventually a green wave 4, and we didn't yet hit the target area for a wave 4. So we're still looking for a WXY or a bigger flat structure. However, if price takes the high and we start looking for potential wave B in a flat in an ABC, we have to be of course very careful, as we are in a trend to the upside, so there might be continuation instead of rejection for a wave C to the downside. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.